Hi, everybody. Thanks for putting up with me for a second time in case you saw me being on the first panel this morning. But I'm super excited by this one. We're going to be focused today on institutional adoption. What level is it at? I've been now in crypto for 8 years, and I swear there's always a panel on institutional adoption every year at every conference. So it feels maybe a little bit mundane, but we're going to try to make it much more interesting and go deep into some of what's really happening today in the market with some of the experts that we have here. So before I get started, I was out speaking with a few people in the VIP section, and I asked a few people what they thought about where institutional adoption was. And I would love to see if anybody would help me out and give a show of hands if you guys think that we are at the kindergarten level, and if you guys kind of agree with that, maybe you can put your hands up just to get a feel of what people kind of in the audience think. Okay, I think I feel the same. But with no further ado, let me hand it over to my lovely panelists to give maybe a 30-second, 1-minute introduction on yourself. Maybe Lior, I'll start with you at the end.
Sure. So hi everyone, my name is Lior Lamesh. I'm co-founder and CEO at GK8. GK8 is a Galaxy company. We've been acquired by Galaxy 2.5 years ago. Galaxy is a NASDAQ-listed company, market leader in digital assets and AI. We started GK8 since 2018 with the mission of increasing the level of trust in the market by providing the most secure self-custody solution. We are leveraging two core solutions: the impenetrable wallet, which is the next generation cold wallet, which can make communication with the blockchain without being connected to the internet, and MPC. We are working with traditional financial institutions and crypto-native companies who are using our solution to offer services such as custody, tokenization, staking, and DeFi. We are working with clients such as DTCC in the US, with Prosegur here, AllUnity, which I shared the stage before about their fully regulated Euro stablecoin as part of a DWS Deutsche Bank project, and I'm excited to be here.
I'm Kevin Riou, working for Swissquote Bank Europe, a Luxembourg-based bank, part of a Swiss group. We do provide trading and custody services in all types of listed assets for both retail clients and institutional clients. And clients can trade either stocks, bonds, ETFs, and crypto since 2017. Clients can either have the custody with us and trade or stake their assets with us.
Hi all, my name is Andri. I work for ZKB. ZKB is Switzerland's second largest bank, and through our subsidiary Swissquote, we are also Switzerland's second largest asset manager. And there I drive various digital asset initiatives, for example, digital asset custody.
Hi, hello everyone. My name is Julie. I work for Six Monks, which is a regulated fund manager based in Luxembourg. We got the license from the regulator in Luxembourg a year ago, a little bit more than a year ago now, to be the first and still the one fund manager regulated in Luxembourg to manage crypto funds and VC funds active in Web3 and crypto ecosystem broadly.
Given we have a great group of institutional experts on the panel today, my view is infrastructure is really critical to adoption. I mean, there's a number of factors critical to adoption, but I think infrastructure is a core piece of that puzzle. So with that being said, I wanted to start off maybe with you, Andri. Over at ZKB, you guys have launched, I think quite early on in the Swiss market, products and services to support clients from a brokerage capability perspective. I wanted to ask you a question around infrastructure. Do you think infrastructure, from your perspective and the company's perspective, is still at the kindergarten level? Are you seeing gaps in terms of the infrastructure architecture you guys have deployed? Is there anything that can kind of help us grow up maybe to that middle school or high school level age group?
Well, generally, I think there's been a great leap from providers providing tech solutions. What it still feels like patchworking. So for us, integrating it into our bank's infrastructure, it's a lot of patchworking, not just, let's say, new technologies onto old technologies, but also in between the newer digital asset players. So I think while the technology from a ground up is there and there are great solutions, question is when will we get standards and best practices. We see that on the trading side, but apart from that, I think we're still lacking that. So that's, in my opinion, the next step. Yeah.
And Kevin, maybe from Swissquote's perspective, how are you seeing it? Is it just the infrastructure side that needs to grow up? Are there challenges with client readiness, regulation? I mean, maybe you can kind of build on what Andri just mentioned.
Yeah, sure. I think in terms of infrastructure, we're not so far, honestly. We have something right now. It's working. Clients can come with us, and with you as well, or everybody. It's existing right now. I think it's just a matter of adoption. Clients need to understand that they can launch their project. They have to convince their investors and then clients. So I think it's more a matter of user adoption, client experience as well. For the end clients. But in terms of infrastructure, it was the very first step. I think it started probably in 2016, 17 in the market. Now we have something, we need to improve it for sure, but we have something right now. It's not the biggest issue that I can identify as of today.
And Lior, from your expert security and technical perspective, I know you feel that from a client readiness and your institutional client base, security comes into play a lot, especially as it relates to the market's understanding of what custody can bring for the market to actually truly adopt and kind of see this at scale. Can you talk about that from a gap perspective and how the market's maturing?
Of course. So I think that the readiness from the security perspective is really still in early stages. We still see hacking events in digital assets reported on a monthly basis, and a large amount is stolen every time. And especially now with regulation become more clear, especially in the US since the beginning of the year, and also the adoption that is going generally, I'm confident that we'll see more and more traditional institutions that will be hacked as well. Right? We've seen recently companies such as Bybit that was hacked for over $1 billion. They used multi-sig and HSM technologies. We've seen in the past Liquid, which is another Japanese exchange that was hacked for while using MPC technology. And that's really taking me to the point that there is some misconceptions today in the market as to what should be the market standard when it comes to security in blockchain. Private keys eventually is the one point in blockchain that make it centralized. And in my opinion, it's the one thing that is the most important to protect. Right? Blockchain is a irreversible protocol, and we should do everything we can in order to avoid this private key do something that it didn't meant to do. And I want to explain a little bit around it of how hackers think. Right? Hacking is a business. And how much hackers will invest to compromise into a bank, it really depends how much you can get. It's about ROI, and hackers will invest millions to steal billions. And based on my experience in the Prime Minister's office, it's safe to assume that $1 million is what hackers need to invest in average in order to compromise one public internet connected computer. So basically, in order to compromise a multi-sig or even MPC, which is again commonly preserved as a sufficient solution for custody, that's clearly not the case, because the ROI for hackers to invest few millions to compromise few public internet connected computers and steal billions is there. And then on the other end, there are some cold wallets which are not necessarily cold. They are all connected at some point, either with a micro USB cable or QR code and camera, or some thumb drive that taking information from internet connected computer to another computer that's supposed to be air-gapped. But they all become hot once they receive input from internet connected computer. And that's why at GK8 we come with a new security approach, which we call impenetrable custody. We're able to do the full process of creating, signing, and sending transactions to the blockchain, which could be served for custody and tokenization without ever receiving input from the internet. And we truly believe that that's the approach to take in order to increase the readiness level from the security gap when it comes to private keys.
Thanks for that, Lior. So we have 3 asset manager companies on the panel, and then one custodian here. And I want to bring it back to Julie. And Julie, at 6 months, my understanding is you guys, I think, are the first alternative investment fund manager regulated out of Luxembourg. And I think that you guys offer a number of third-party funds for digital and crypto to your clients. Maybe you can talk a little bit more about, from your perspective, kind of distribution of funds in terms of what client traction has looked like over the course of the last few years, and how you've seen client demand pick up or not, or any challenges around that side of the business.
Yeah, sure. So I think that's a year ago, I was in the same place explaining that in Luxembourg, now we had a solution where we could make a regulated fund fully operational with all stakeholders around it. So today, I think that there is not about the why, but more about the how. We can do it in Luxembourg. And we see more and more investors and more fund promoters from the institutional space wanting to go on this asset class. And the idea and their question is more how we can do it with the same standard and the same expectation than in the traditional finance world, like for any other asset class, like private equity, for instance. So it's like where an actor like Six Monks come into the play and provide the full turnkey solution in terms of fund structuring, fund management, and administration, because we provide in terms of risk management, fund administration, valuation oversight, all the appropriate regulatory framework that those institutional investors and fund promoters need actually to attract more capital from institutional. So we see more and more traction. It's true that there are still gaps to fill in terms of education, in terms of understanding, because there is a gap, I think, when you come from the native crypto space and that you want to enter the full regulatory landscape. And there are some actors like us, like Swissquote, like other custodian, institutional grade custodian, that can provide and fill this gap actually to make this adoption growing. And in terms of distribution, we see more and more solution actors regulated, like investment firm in the sense of the European regulations, that are ready to provide solution and to provide platform to ease the distribution and the marketing activities of those funds.
Just building on that a little bit, maybe for Kevin and Andri. Given my role at Wyden, I work with a lot of banks and brokers and lead sales for them. So, and I've been in the crypto space for 8 years, so I've seen a lot of different use cases play out and success stories and different factors that play a role in companies adopting this asset class and these new instruments and products and how they think about going to market. In terms of that, how has it been for your companies when you're building a business case and you're trying to get this approved? Clearly, you both have live, tangible products out there. But if you were to launch, I don't know, a new tangential business that had to still do with crypto, or a new instrument, or a new product line, say you're only offering spot, but you wanted to move into a derivative or some sort of CFD structure, structured product, how have you seen it? Because the way I've seen it traditionally over the last number of years is the banks have to build the case, and they have to go to their senior management, their C-suite, their executive board, and they have to get the buy-in for the budget and the case, and they have to show these assumptions that the market's going to move in the direction that this business is strategically going to be profitable. Is that still happening, or do you think there's enough, optimism and enough kind of optics that are positive in the market that are making it a lot easier for you, even if you're not profitable today, to kind of have that buy-in to really build and scale properly at the level you might want to into the future?
Well, I differentiate between two things.
Okay.
The first thing, when we talk about crypto as an asset class, so we see a real business case, we see the demand, and I'm sure we're going to touch on that very soon. So that's an easy one, because you actually make money doing it, right? And a lot of banks have proven it, and we are seeing that now for like 12 months as well. And then the second thing, I call it hatching. When we talk about tokenization, and we've been part of the first wholesale CBD project, we've been tokenizing bonds for years now and so on, but it's more like experimenting, and I always think it's kind of a hedge. So once tokenization will take off, you're not left behind. But it's more like an investment to not be left behind right now. I don't really think it's a business case. So you have to very differentiate. Both has a place. One, there's a clear demand. The other one, still in the playground stage, in my opinion.
Yeah, I can confirm 100% what has been said. Honestly, it's very easy to convince the top management that we need to launch a project on crypto. It was way more difficult in 2017 when we decided to move forward at first. But now today, every crypto project is very profitable from scratch, honestly. It's not very costly to develop something since you already have the custody solution in place. It's a most, it's the most costly part at the beginning. For the tokenization, we see a big appetite from investors on the private markets, so we can see an opportunity for a bridge between, the crypto digital assets world and the private markets. That is a market with a huge appetite, so I'm pretty sure that it will be very easy for us to develop it in the future. Not technically, but from a client's perspective, it's easy to have the investments coming. So it's not really difficult for us to convince the top management, and but we listen to our clients. Basically, we don't come to a project if we don't have the client's demand. That's how we proceed on this part.
Yeah, from technology provider perspective, what we see that made clients happy and projects successful are a few main anchors that we've seen. So, for example, a real-world project that we did around tokenization, which is the Euro stablecoin project as part of All Unity, which is a joint venture of Galaxy, DWS, and Flow Traders. So what we see is that when there is a pattern, that there is a trusted traditional institution partner with the needed level of trust that he brings to the market by his brand name as to other products that he did in the traditional assets world, that's one thing that really makes the difference from the trust perspective. The second thing that we see that makes projects successful is having a digital asset partner, someone who already done like digital assets project and has deep connections in the market and can bridge the gap between traditional assets to digital assets. And that's where, for example, Galaxy come into play. So in this project, for example, we do market making and distribution. And we have the know-how from a regulation perspective how to make this project succeed. And also we have the connections with foundations that willing to make investments in this tokenization project, so it cannot make them successfully in advance. And the third pillar is the technology partnership, right? To have a partner that provide the custody and the tokenization perspective into the table. When it comes to tokenization, it makes things a little bit even more challenging, because when it comes to provide just custody for crypto, you just need to all the assets to have policy engine as to how the assets should be managed and protected and controlled by the organization. But when it comes to tokenization, you need different level of control. You need to have smart contract level of policy. For example, who can mint, how much anyone can mint, and so on and so forth. Yeah.
Yeah, maybe in terms of product, what I can add is that with it's a year, a little bit more than a year now that we are authorized, and we have been able to implement certain type of product which are finally the same that exist already in the alternative investment fund world. It's just that those products are adapted to the crypto investment strategy. So clearly we can do, we have a strong background of what already exists, and crypto asset strategy can be really fit in this type of product, alternative investment fund. What we also working on, it's DeFi protocols, because actually we see more and more fund promoters coming to us asking for a way to have a regulated product investing in DeFi protocols. So we are working hard with a regulated custodian, to find a way to for those funds to invest in in DeFi protocols in a regulated way, ensuring evaluation oversight, risk management aspect in place, and so on. So this is something that we'll be soon ready to implement, and we are pretty happy of that.
I want to spend, we have about 10 minutes left, and I want to try to go deeper into the client use cases. I think it's really interesting here, and I know you guys might not be able to share everything, but I'd love maybe, Andri, you to start off and talk in more detail around the use case you're seeing at ZKB in terms of what you're offering, where the traction is, where maybe the objections or challenges are with your clients or clients sitting on the sidelines still, and any success factors to continue to help scale and grow into different products and services within this digital asset or crypto operating model that you're continuing to build on.
So the interesting thing is we are a universal bank, so we serve retail but also institutional clients. And the interesting thing there is a bit over a year ago when we launched our crypto trading and custody offering, it was mainly to stop the bleeding from outgoing payments towards crypto exchanges. So a lot of private clients who were already doing crypto, and the goal was to get them back, or at least to get a part of that back, and that worked very well. So the numbers exceeded our expectations, even though I cannot share them. And I think the thing that has changed in the past 6 months, which has been very interesting to see, is on the institutional side. So we serve very traditional conservative client on that side, so pension funds, also other institutions. And the thing there is, until like 6 months ago, that was not a topic. And suddenly, when we talk about multi-asset strategies now, Bitcoin is a part of that. So it used to be private equity, commodities, real estate, whatever, and now suddenly it's Bitcoin. And we actually have clients who demand that Bitcoin is part of their multi-asset portfolios that they have with us. So I think a really strong shift happened, and I'm sure the American wealth managers who now say 2% of your allocation should be in Bitcoin, that was a driver. But so I'm very bullish on that also when I talk to other asset managers in Switzerland. Next 12 to 24 months, crypto will really become a standard in multi-asset portfolios.
Yeah, maybe I can just add that we had a lot of business cases in the last few years, but for this year, 2025, the biggest trend that we identified, it was, for example, what we call the Bitcoin treasury companies, strategies similar to the one that Strategy is doing in the US. And it's a trend that is coming in Europe with companies just like Capital B, H100. I can quote a lot of companies like that. And they are looking for partners. They are listed companies, so they need to discuss with the regulator, or the local regulators. So they're looking for regulated custodians that are already identified by these regulators. And you know, as we just mentioned before, clients, they want to invest in Bitcoin, because when we are talking about crypto, I would say 70% and 80% of the investment is Bitcoin, but they don't know how. They don't want to have their private key on their own because they are afraid to lose it. So are trying to find solutions. So there are a lot of solutions for that, you know, funds, ETPs, or spot through an exchange. But now there is a new way. These are, you know, the big country companies that are listed, and you can just buy a stock basically, and you have you have Bitcoin indirectly through the intermediary of this company. So it's the biggest trend that we identified in 2025 on our end.
Maybe I think that's a great point you pointed out. The products are out there. Now the question is who uses them, right? And I think what we are seeing now is we see the momentum towards the tipping point where crypto assets in traditional asset management will become mainstream.
Yeah, just quickly from the infrastructure perspective, in order to support these guys to bring their products to the market, so we don't need to be regulated by ourselves as technology providers, right? But the traditional institutions that are getting into the game, they do need. And there are different requests of Mika, Dora, right? Buffing, depends when you want to operate. And our mission in these partnerships all the time is providing the product that will enable them to meet the requirements. Right, so the ability to do segregation of assets between the institution assets to its clients' assets, the ability to do AML capabilities, right? So according to compliance, you could freeze or unfreeze assets, and also different level of controls and pen tests and audits on the code, so they can meet the requirements and really make the product successful and getting into production according to regulation.
Yeah, I agree with Lior on the part of the partnership. We see that we are more, and to make this adoption growing, we need to be more than a service provider. At least on the fund management part and administration part, we need really to partner with the fund promoter and to accompany them in this journey to make sure that the product itself is operational. Maybe in terms of traction and type of investment strategy we see deployed, we see two main different investment strategy. The first one is high frequency trading with a liquid token in portfolio, and on the other side, more VC strategy with for instance, early stage token shares of crypto business, Web3, and blockchain business in portfolio.
Do you guys think there's anything else that could maybe further accelerate the process of adoption with maybe some of the traditional clients you have that are sitting on the sideline? Could it be, I don't know, bigger budgets, marketing budgets? Could it be regulation? Could it be better pricing in terms of fee models you offer? Could it be, just a lack of understanding? Is there anything you think that the industry is really missing today to kind of pole vault it into that next stage? Or do you really think it's just a time game?
Can start on this one. Yeah, it's a bit of everything you mentioned, I think. There's for sure, I would say, an interoperability between all the regulations to make sure that they can work with each other. Meaning, like, if we take the IFMD, our framework, or MiCA or MiFID, for instance, there are a lot of relationship with each other. So we need some more regulation guidance on it to make things work with each other. The other points would be, for sure, education. But I would say education along the chain, not for the investor, institutional investor, or institutional promoters, but also for depositories, custodians, auditors. Everybody needs to speak the same language from an operational standpoint, from a regulatory compliance standpoint. And maybe the last part would be the budget, indeed, because in our case, the solution might be seen costly at the beginning, but it has to be put in balance and seen with all the opportunities that it can represent, notably in terms of distribution, using the passport of the IFM, European passport in terms of distribution, allow more opportunities. So extend the distribution and extend the fundraising capabilities of the fund promoter. And it also allow to attract, I think, more capital, bigger tickets from investors, because when you invest in an alternative investment fund that is supervised by an IFM, you are ensured that you have the appropriate regulatory framework in place. And we have seen that, we have seen it for some fund that we have under management. They will not have been able to attract those investors, those type of institutional professional investor, if they haven't the regulatory scope in place.
And what about, the rest of the group? Can we graduate from kindergarten to the next class year with some acceleration tactics here?
So I've been at that intersection of TradFi and DeFi for quite some years now, and I've never been more bullish about what's happening. I think we have the momentum in Europe and in the US, and the only thing I would wish for would be less noise, more education, because the crypto industry is very, very loud, but it's not always positive or with substance behind it. And I think if we want to mature as an industry, that's what we should focus on.
I couldn't agree more. I think that education is really a mandatory thing. And I would like to look at the question from the other way around, not necessarily from what would accelerate, but from what would might stop it, right? And I think that what would slow it down is if one of the major banks will be hacked at some point. And if we look at the shorter term, I think the most commonly used case is tokenization. And I was talking before about the importance of private key security in crypto custody in general. But when it comes to tokenization, the risk is just the same, right? In tokenization, the single point of failure that makes blockchain centralized is the admin key. Any tokenization project has its own admin key, which is the one that can do minting, burning, updating the allow list, freeze assets, and so on. And if in the shorter term, the education will not be accordingly, and banks will not utilize the needed private keys level of security technology that is needed, then this admin key could be compromised and it could make a very painful conclusion. We already see today in tokenization that the source of truth is on-chain, right? There are some projects that can receive stable coins as a collateral to loans over decentralized exchanges, or some DeFi protocols, and stablecoins projects and money market funds projects are getting traction, such as a Biddle of BlackRock and Benji of Franklin Templeton, and they are already received as on-chain collateral for loans. So this is definitely something that should be solved as it can really slow down the market.
Yeah, and just quickly, in terms of success, I think we just need to have a look at what's happening in the US on this part. The day they decided to launch the IBIT ETF, for example, all the US investors they decided to buy the IBIT, and they buy it through the intermediary of the Shashwab account or interactive brokers, and they invest in the pension funds, not directly in Bitcoin because they don't want to invest in an asset that they don't know how to control it or anything. They delegate the management to an institutional player, and that's the way they do it. And I think we have the recipe in Europe. We just need to develop similar products, and people will not probably buy directly Bitcoin or Ethereum or whatever. They will invest in a product that they understand, that they are used to, and it will go through the intermediary of institutional players that will be able to manage the risk in terms of custody, risk of hackers that you mentioned before. And I think it's probably the recipe to follow in the coming years.
I'm sure we could talk about this all day, but I think we're out of time. So, but it does sound like from all the years I've been on the panels and in the industry, it sounds like this is one of the first times I'm feeling quite extreme positive sentiment in where the industry is, and hearing from the asset managers on the panel, and of course GK8 as well, hearing that actually the use cases at these sell-side organizations are there, and they don't actually have to justify this as much anymore to the market, to their management. It's a huge, huge advancement, and over the last few years, I have not seen that up until probably the last 6 to 12 months. And just for me, that's the ultimate takeaway here, that mindset and that shift at that decision maker level to actually instill change in the market is actually happening right now before our eyes. So with that, I'll leave you guys. Thank you very much for having us.